Are UK house prices set to soar? Savills' latest 5-year forecast reveals surprising growth. In a remarkable turnaround, Savills has recently adjusted its 5-year forecast for UK house prices, showing an upward trend that defies earlier predictions. Initially expected to see a downturn, the updated forecast now suggests a significant uptick in the property market, driven by changes in economic conditions and mortgage costs.
What has happened to house prices at the top end of the market so far this year, and how has that varied in different parts of the prime market?
So we've actually begun to see the beginnings of a recovery across the prime housing markets so far this year, and that's been particularly true across markets where buyers tend to be more reliant on mortgages, so whether that's in outer prime London or across the regional markets. Whereas across central London, actually we've seen values remain broadly flat, but again that's been its strongest performance since the middle of 2022, so definitely signs of recovery across the prime markets generally.
This video dives into the details of Savills' revised predictions, shedding light on what this means for homeowners and investors across the UK. Savills now anticipates a 2.5% increase in house prices for 2024, a substantial shift from the previously forecasted 3% decline. By the end of 2028, they expect an overall growth of 21.6%, revising their earlier estimate of 17.9%. This optimistic outlook is primarily due to the recent reductions in mortgage debt costs, which have buoyed the market unexpectedly early in the year. The number of housing transactions is also expected to rise, with forecasts suggesting an increase of 1.05 million in 2024, up from last year's prediction of 1.02 million. These projections apply to the average house prices in the secondary market, with new builds possibly not experiencing the same rate of growth.
Which buyer groups have been most active in the prime market?
Yeah, well, I'd say it's probably those needs-based buyers. What we've seen previously is a bit of a differential between those buyers who've got lots of cash and are equity rich, but we've seen a bit of a pickup in demand from those with a mortgage. That reflects the fact that we had more stability in the mortgage markets.
Savills attributes this positive adjustment to a slight decrease in mortgage costs, which have become less volatile, and a modest improvement in the economic growth outlook for 2024. Lucian Cook, head of residential research at Savills, notes that the mortgage market's competitive nature has allowed for anticipation of base rate cuts by banks, thus boosting buyer confidence and stabilising prices. Despite the Bank of England's base rate holding steady at 5.25%, mortgage costs have seen more favourable adjustments. The cost for a nationwide 2-year fixed-rate mortgage has decreased to 4.84% from 5.34%, and the 5-year fixed rate now stands at 4.5%. These changes have led to a rise in monthly mortgage approvals, crossing 60,000 in the early months of the year, with a subtle annual house price growth of 0.6% by the end of April. However, Cook also cautions that external factors such as ongoing uncertainties in the Middle East and unexpected inflation spikes in the US could cause swap rates to rise, potentially hampering the downward trend in mortgage rates.
How are the prospects for prices and market activity affected by the outlook for inflation and interest rates?
So we've actually seen that the economic outlook has improved so far in 2024. Inflation has started to come down closer towards that 2% Bank of England target. And so as we see inflation continue to come down, mortgage rates are also likely to continue improving, particularly as a Bank of England base rate cut comes onto the horizon. And so that's likely to give buyers more confidence in terms of what their future budgets will look like.
Furthermore, the prospect of an autumn election might influence market sentiment later in the year, although it appears that most market participants have already considered the possibility of a government change. Looking ahead, the distribution of growth over the next 5 years is expected to be more uniform, with stronger economic performances in 2025 and 2026, likely bolstering buyer sentiment. While steady rate cuts are anticipated to support this growth, affordability could become a concern, especially in high-demand areas like London and the South East as we approach the end of the forecast period. So what does this mean for you? Well, if you're a first-time buyer, then now could be a great time to get on the ladder. Buying your first home today could result in 20% capital appreciation over the next 5 years. To put that into context for you, if you were to buy a £300,000 home today, in 5 years' time, that same home could be worth £60,000 more, which could be a solid block of your wealth building foundations. Equally, if you're an investor and you were to buy a property today, that same property could be worth 20% more in 5 years' time, which, using the average example of a £300,000 property, could add £60,000 to your net worth. And if you buy in the right areas with high rental demand and strong yields, you could also benefit from a 10% per year return on your capital employed from the rental income. This is fantastic news for home buyers and investors alike. For a deeper dive into how these predictions could affect your property investments and housing decisions, stay tuned to our channel. If you found this analysis helpful, don't forget to hit the subscribe button. Keep up to date with our latest insights and updates from the world of UK property markets. Join us as we explore the dynamic landscape of property and what future trends could mean for you. I hope you've enjoyed this video, and as always, I'll see you on the next one.